everyone, it's Melinda with eXp Realty. Today I want to talk about a question I hear all the time, which is, am I financially ready to buy a home? And I think a lot of people are assuming buying a house requires perfect finances, perfect credit, no debt, and some giant salary, but that's usually not reality. A lot of first-time buyers are still figuring things out financially while planning for the future at the same time. So in this video, I wanted to break down what lenders are actually looking for, some myths that scare people away from buying, and some signs someone may be more prepared than they realized. One of the biggest misconceptions people have is thinking they need a super high salary to buy a home. What lenders are usually looking for is more than anything, stability. If someone has income that's consistent and sustainable, that can make a lot more than having a huge paycheck. And you definitely do not need to fit one perfect career box. There are buyers who work hourly jobs, some are self-employed, freelance, work overtime, or have multiple streams of income. A lot of people think that automatically disqualifies them, but it really depends on the overall financial picture. For example, hourly workers may qualify based on average income history. Self-employed buyers may qualify using tax returns and business records, and people with multiple jobs may sometimes be able to use both incomes if they've had them consistently for a while. Every situation is different, which is why it's usually a good idea to talk to a lender early instead of assuming you can't buy. I also think there are certain signs that someone is beginning to become financially ready for home ownership. Not necessarily perfect financially, but moving in the right direction. Some examples are that they've been consistently employed for a while, they're paying bills on time, they've started building savings, their income feels more predictable, and they've started to think long-term instead of just month-to-month survival. I also think mindset plays a role. Usually when people start wanting more stability, more control over their future, they start imagining the kind of place they want to live long-term. That's often when these conversations start becoming more relevant. Another thing that scares people is hearing that buying a home is expensive. And yes, there are costs involved. You want to prepare for closing costs, the down payment, and ideally some emergency savings for repairs or updates after moving in. But one important thing people should know is that you do not necessarily need 20% down. A lot of first-time buyers are surprised by that. There are programs where buyers may put down around 3 to 5% and sometimes even lower depending on their situation. Now obviously, the more you put down, the better off you may be financially. But I think hearing 20% down causes some people to completely give up before they even research what options exist. And honestly, one of the most important numbers isn't even necessarily the total home price, it's the monthly payment, because that's what affects your day-to-day life and budget. Another really common fear is debt. A lot of first-time buyers have student loans, car payments, or credit card debt, and that by itself is very normal. What lenders are usually looking at is whether those payments are manageable compared to your income. One major thing lenders evaluate is debt to income ratio. So they compare your monthly debt payments against your monthly income to see whether things seem manageable overall. And then there's credit. People get really scared about credit scores. Credit's definitely important, but it's usually not as black and white as people think it is. A higher score can help someone qualify for better options or better rates, but less than perfect credit does not automatically mean homeownership is impossible. There are also different loan programs and situations that lenders can work with. And I think another huge misconception is people being scared to even talk to a lender because they think checking their finances is going to ruin their credit forever. Usually having conversations and getting information early is actually very helpful. Now, if someone feels financially stretched thin right now, I do think there are some things they can start working on. One of the biggest things is simply becoming more aware of where their money is going. Back when I personally had a really tight budget, I tracked every dollar and cent I spent. And when you have to monitor every purchase, it really makes you more aware about and being intentional about your shopping, but it also helps to reduce your impulsive buying. And if your income increases over time, it can really help to maintain your current lifestyle for a while instead of immediately increasing your spending. That gives you more room to build savings and avoid relying on debt, when unexpected things happen. I also think people should think beyond financing when they're deciding to buy. So there's other things to think about, what kind of areas they want to live in, whether they want walkability, whether they want land to maintain, the proximity to work, their family, their schools, what kind of lifestyle actually fits them best. And emotionally, buying a home is a big decision too. You don't want to rush into it if you aren't truly ready. But I also think if someone is already imagining what kind of place they want to live in and thinking long-term about their future, that may already be a sign they're beginning to move forward in that goal mentality. I also get asked a lot whether someone should keep renting or buy. And honestly, it depends on the individual. Sometimes renting for a couple more years makes complete sense. Maybe someone wants more savings or to improve their credit or to settle into an area first, they just need a little bit of time to plan, and that's completely okay. But if someone's already considering buying, I do think it's worth researching options now instead of assuming it's impossible. Learning does not equate commitment. Talking to an agent or a lender does not mean you are suddenly forced to buy a house tomorrow. It just gives you information and a strategy. I think some of the biggest myths that scare people away from buying are needing perfect credit, needing zero debt, needing high income, or feeling like they need to have their entire life perfectly figured out. Most people do not have a perfectly mapped out 50-year plan. You don't need to know exactly where your entire life is going in order to buy a home. And another big one, there's probably never going to be a perfect time. Sometimes rates are high, sometimes prices are high, and sometimes competition is high. So waiting for every single thing to align perfectly may mean waiting forever. So if you've been asking yourself, am I financially ready to buy a home? Well, my biggest recommendation is just to start learning. Talk to a lender, ask questions, understand your options. Even if you're not ready today, having a plan can make things feel so much less overwhelming. And if you're already asking yourself these questions, there's a good chance part of you is already thinking seriously about your future and what you want long term. If you have any questions about buying a home in Michigan, feel free to reach out anytime. And if this video helped you, feel free to like, subscribe, and I will see you in the next one.